Guys, happy Sunday. Hope that you guys are all having a good end to your overall weekend. Today, it's our Sunday Stock Talk. This is where we come together and we talk about the top stocks, top five that we're going to be doing today that our group members see value in. So all I literally ask you to do is if you want me to break down your favorite stock that you're looking at for this week, share it in the live chat. You do have to be subscribed to the YouTube channel to partake in the live chat. I really hope that, again, out of the five stocks we talk about, maybe one or two of them are ones that you actually see value in. You can add them to your watch list, create a trade plan, and then follow with proper execution when it is that you see it to make sense to you. So again, hope that you learned something new. And if you do, please consider dropping a thumbs up if you feel like we earned it. I'm not going to take too much of your guys' time. I want this live stream from start to finish to be about 10 minutes long. So let's go ahead and jump right into it. I'm going to quickly update you on where the NASDAQ market is currently at, and then I'll start breaking down your top stocks. So if you want me to break it down for you, share it in the live chat, and let's go ahead and get right to it. So overall, NASDAQ futures are trading a little bit lower than where they closed at on Friday. So they're down about 0.12%. Really doesn't mean much because, again, by the time the market opens tomorrow in the morning, this could have fully recovered and to be back in the green. One of the things that I want to remind you is that this is QQQ. This is the NASDAQ ETF. Market was really bullish last week. So what I would like to see, so what we're going to really focus on during my live trading session tomorrow right at market open is to see if that momentum continues right on Monday, right? Because we had such a strong rally that anytime we have strong rallies like this, we could potentially just even do a little retracement back down to the EMA or the moving average. As of right now, when we look at the NASDAQ market on the 4-hour time frame, again, we are a little bit on the overbought side. There's nothing wrong with talking about that. Being overbought doesn't mean that the market has to pull on back. It just is good to be aware that looking at the RSI, we're at 76 RSI. Pretty overbought, and if that momentum does not continue to send the market higher for longer, then we could potentially see a nice little pullback to around the EMA line, which isn't a crash, but a nice little pullback where you can buy in at better prices if you think that the overall markets are going higher for a longer period of time. So now that we talked about where the market currently stands, and again, we talked about the live trading, if you ever want to tune on in right at market open tomorrow, I trade live Monday through Friday. It's the second link in the description down below, and would love to have you there if it is that it's something that you want to experience yourself. So let's go ahead and jump right into it. Let's see who we have here. We got Moses, we got Steve, we got Lifestyle. If you guys are tuning on in live, just make sure you're subscribed to the channel and you should be able to partake in this live chat. We got Steven, we got Rabir. Am I pronouncing that correctly? I do apologize. We got Skinny FX, Ilian. What's going on, my guy? Low Win, Matt N, Jose, Steven, Wajdi. I do not know how to pronounce that one. We got Home Run Rudy. Mike does stuff. What's up? What's up? Uplift Trading, Home Run Rudy. Yep. What's going on, my guy? We got Seneth. What's up? What's up? Thank you guys again for tuning on in. What's going on? Vicente Rees. What's going on from Chicago? I like that. All right. Well, I appreciate you tuning on in. Hopefully I earn your thumbs up, and let's go ahead and break down your top stocks. So Save. Thanks, broski. What's going on, Lifestyle Ortiz? Let's go ahead and break down. We'll start off with Mr. Ortiz asking about Save, which is Spirit Airlines. One of the things that I love to remind traders is, again, direction is super important. Save is a company that is in the brinks of potentially filing for bankruptcy. They had a potential partnership that was going to save them. I think it was with JetBlue. The U.S. stepped in, the government stepped in and said, no, we're not going to allow this partnership to come through, and that's why it's been selling off. So what you're kind of looking for with Save is kind of like a Hail Mary. You're hoping for something to happen. You're hoping for someone to step on in and save. Kind of ironic, right? But it's not looking good. It lost an additional 8.5%. The cheap can always get cheaper. And if you're trying to buy in the lows and trying to ride the rip ups, then your risk tolerance just has to be really high. This is not a stock that I would encourage for beginners, for people that are just getting started. This is more for momentum traders or people that like to enter risky trades. And it's all based off of how oversold it is, how much you can tolerate. And then when it begins to somewhat recover, that you know when to take profits. Taking profits and risk management are going to be A1. This is just not one that I would recommend for everyone. I do see why you're paying attention to it because it had a nice little sell-off on Friday, thinking that it could potentially begin to recover. And yeah, it can, right? Because if it does begin to recover from $3.35 back to previous highs, that's a 9% return. And I get it. It is attractive. I 100% see that, but I just want to remind you, it's not going to be easy. It's going to be challenging. There's going to be a lot of, it's going to be an emotional roller coaster if you're very heavy with your position size. But if you're someone that, can tolerate that kind of risk, that it comes at a greater form of risk and you have the experience to back it up, then I see why you would be paying attention to it. Other than that, on the overall big picture, it's a very strong bearish stock. And it's just one that until news begins to get poured in that it's actually beginning to do better, all I could think about is that save is only a matter of time for it to file from bankruptcy. So that's my 2 cents on that. Let's go ahead and move on to the next week. So are there any earnings to watch out for this week? So I know that there is Pepsi that's going to be reporting earnings this week. And if my schedule is correct, we got Pepsi reporting earnings on Thursday before the market opens. And then before the market opens, we also have Delta reporting earnings. Other than that, we have Wells Fargo, Citigroup on Friday, and JP Morgan. So any big tech companies reporting earnings this week? The simple answer is no. I know that not this upcoming week, but next week, Tesla is going to be reporting earnings. I think it's Wednesday of the following week, but CPI data report is this week. Remember, CPI data report always tends to be anywhere from like the 9th to the 13th of the month. So I'm really excited to be watching for that CPI data report to see if inflation comes in higher or lower than what is expected. But let's go ahead and move on to the next one. So a message to you on IG about the LPP group joining soon. Hope all is well. What's going on, Matt? I'll look out for that message. If I didn't respond and it's been more than 24 hours, I probably might have overlooked it. So just send me a little period so it gets bumped right back up to the top. Okay, I appreciate that. Hey, Ricky, thoughts on SMCI? SMCI, how I love that one. Just kidding. SMCI, it's been kind of lacking progress. For those that are a little bit familiar or not very familiar with SMCI, SMCI is its own company, but it follows very closely to NVIDIA's performance. The way that I like to view it is anytime NVIDIA gaps up, SMCI overreacts. Anytime NVIDIA gaps down, SMCI overreacts. So it's kind of just more of a volatile NVIDIA, in my opinion. I think it's extremely overbought. I think that when NVIDIA begins to pull on back, and it's only a matter of time, right? That NVIDIA begins to pull on back based off of its amazing performance that it's had in 2024. I think we'll experience a very similar thing to when we saw SMCI go from $1,200 per share all the way down to $690. When you think about that, not enough people pay attention to it because they're like, oh, Ricky, this thing is still in the green. Yes, but a majority of people are buying up here. And that's the very risky part about it, is that this sell-off was nearly 45%. I mean, it lost nearly half of its value. And you have to see that for what it is. So if SMCI does not continue to rally, which it's not right now, a lot of consolidation. So direction is ultimately unclear right now. When you look at this at the 4-hour time frame, it doesn't take a rocket scientist, right? Even the beginners that are going through LPP right now can probably tell you, right? If I were to ask you guys, hey, is this, within the 3 stages of a reversal? Is this in the rejection, consolidation, or confirmation stage? They could easily see that we have a very common resistance right around, what is that, 950? And a very common support of right around 750. So a lot of consolidation. So you could try to trade the low points and the high points, but if you're someone that prefers to trade only one direction is ultimately very clear, so either very bullish or very bearish, then you have to wait for a direction to be favorable, because it is not right now. Right now, it would be more for traders that are conditioned to trade overbought and oversold reversals, right? Knowing when to buy, knowing when to take profits, knowing when to buy, knowing when to take profits, knowing when to buy, knowing when to take profits, and then again, at the lower 750 range, knowing when to buy, knowing when to take profits. So in my opinion, for SMCI, it all is based off of who you are as a trader. If you're someone that prefers direction to be clear, I would stay away from SMCI. If you're someone that prefers to trade overbought and oversold reversals and you're okay with trading in the consolidation phases, then again, this might be something that you might want to entertain when it's within range. Remember, These trades all have to do with when the opportunity presents itself to be able to buy the opportunity, the deal, and be able to make money as it begins to recover. This is something that we talk about all the time within our LPP group, is allowing the opportunity to present itself and not thinking that opportunity is on your schedule. And trust me, I mean, I say this over and over again. I make the mistake all the time where we get stubborn, we become entitled, and we're like, no, we want to trade something today, right? We want an opportunity. We want to use our day trades if you're under the PDT rule. But the more from my experience, the thing that I want to preach is how important it is to stay patient, stay calculated, and focus on those quality trades. Trade less, profit more. That should be the motto for those that are within their first year of trading. So let me know what you think about that breakdown for SMCI. Bros as well as a nice swing. So Bros is Dutch Bros, right? Yep. So this is up to you, right? We talked about this when Dutch Bros was a little bit more on the oversold side, and we saw a reversal opportunity because the deal was presenting itself. This is kind of the opposite now because Dutch Bros is beginning to recover, and it does have some upside potential based off of previous highs. But I want to remind you, if I'm not mistaken, Dutch Bros is a recent IPO. It IPO'd in 2021. It rallied strong. It sold off. It found its support, and it's trying to recover. But just imagine how much it would suck going from $42 all the way back down to $26. I mean, you would lose nearly half of whatever it is that you have invested. So I do agree that Dutch Bros might be something that you might want to entertain if direction continues to remain bullish. But as soon as this thing begins to trade, let's see, on the 1 hour time frame, if we begin to see signs of progress below that 1 hour moving average, I would cut losses there. That would be a break of pattern to me. It's no longer bullish, and there's just too much downside risk based off of previous patterns. This would really have to be more based off of not just technicals, but fundamentals. What is projected to happen to Dutch Bros in the following quarters and in the following years? Do we see more upside? Because that is really what can only keep Dutch Bros going, right? Because looking at previous highs, I mean, it's already had an amazing recovery from $20 per share all the way up to $40. It's doubled in price. But now the question is it going to continue, or are we going to begin to struggle here or potentially pull on back? And that's where you need to do your due diligence and make sure that you put yourself in a position to succeed. It'd be horrible just to trade off of technicals and then not have known that, hey, the projections or the guidance for 2024 and 2025 were not very good for Dutch Bros. So at that point, you could have just informed yourself to not have purchased at current highs or 52-week highs or whatever it's at before the pullback itself. So something that I could consider adding to my watch list as a potential swing trade if fundamentals support it. So I think it's a great stock that you brought up. I just wouldn't be able to just trade or swing trade it solely based off of technicals. I would definitely have to look into the fundamentals and see what the company is saying itself about future growth projections and to see if I agree, right? As I would encourage you to do the same, to look into the company and see if it meets your criteria. So let's go ahead and move on to the next one. So we got DraftKings. I don't think we've done that one in a while. So what is it? Is that this it? Yeah, DKNG. All right. So DraftKings did have a rough, from 2021. I remember it peaking. It sold off to lows of nearly $10 per share. It had a really strong rally all the way up to $50 almost. Look at that. From $10 all the way up to $50, and now it's pulled on back. So what do you think I'm going to say here? So this is what I like to call a critical point. This could either be like an amazing dip buy opportunity where if you like trading reversals, this is a good stock to watch here, because if it does begin to recover and make its way back up to previous highs, this offers a pretty decent ROI, right? About 30%, great. But if you look at it, it's been forming lower highs and lower lows, and it's breaking the moving average, something that has not happened since its rally. So some might view this as a break of pattern, which, Ricky, well, what does that mean? That means that this uptrend this rally that it had from lows of $10 all the way up to previous highs of $49, it broke this channel, this ascending uptrend pattern, where now it's trading below the moving average. It looks like it's lost its momentum, it's lost its steam, and now this is where we could potentially see it begin to make lower lows and lower highs. So the idea behind this is kind of like, I want to give you a real world example. The idea behind this is I don't even have to go to another stock. I mean, I could go to the company itself. Its history, right? From $10, holy crap, this is almost identical. It rallies, it's holding above the moving average the entire time, and it wasn't until it broke below the moving average on the day chart that it actually began to struggle. At this point, we begin to see that, okay, this pullback is more than any other pullback we've had in the past before, and it's stagnant. It's staying lower for longer, and that means that, again, demand is simply declining. And then again, it goes back to retest. It couldn't do it, breaks back below the moving average, and ultimately ends up breaking its pattern and selling off. This is kind of where we are at possibly for DraftKings. I actually think this is a really great example of a stock that it's in the very early stages of just peaking from a really strong rally, which again, we'll just have to follow up and see. So if this thing does begin to recover and indicate signs of an uptrend, I could see why maybe you might want to go long on it, but I just want to make you aware, right? We can't just talk about the upside potential. We have to talk about the downside risk. So, bro, Hood is getting ready to pop. I wouldn't agree with that. Hood is a stock that has been struggling. It went from highs of $85 to lows of $6. And if you pay attention to Hood, right? This is the one that you're talking about, Kenneth? Right? From $7 up to $24. What do you mean that it's getting ready to pop? It has popped off. This is like a, 200% return? Yeah. Okay, and again, we can each have our own opinions, right? And that's the thing that I want to remind you is that if Robinhood, which a lot of its demand came from this whole crypto boom, kind of just like Coinbase, if those things continue to lack, and just like we continue to see Bitcoin slightly decline as time goes on, have you guys paid attention to Bitcoin? No one's talking about it. All of those crypto guys that you guys follow are probably not talking about Bitcoin very much right now. They talk about it on the way up, but they're not probably talking about it now because it's at the lowest point it's been since its rally, right? It's actually beginning to decline. And just like we talked about on DraftKings, right? It's losing its steam. This thing was supposed to be at $100,000 or $350,000 by the end of the year. Where are all of those projections, right? It was Robert Kiyosaki that supposedly made that projection for the end of 2024. But it's losing its steam right now. So, and again, no one can predict the future. I'm not here to like point the finger and be like, hey, they said this, look what's happening. We all have assumptions. I make assumptions, you make assumptions. We all have projections. But the point is just like when we began to see lack of progress, that should have been a red flag. If you know how to read charts, if you know how to understand price action, you could have easily seen that, okay, we are lacking progress beyond $72,000 per coin, and easily have seen that, okay, if we're lacking progress and we continue to retest and get rejected, it's only a matter of time for people to get tired to then just lock in profits and these sell-offs happen. I truly would not be surprised that if we break below $50,000, I think we could go all the way back down to 30. And I think everyone that is heavily leveraged will then get margin called, and it's just going to be a tsunami of selling pressure and bankruptcies and defaults. And this is why it's so important to understand overbought and oversold levels. But when it comes down, you might be asking, well, Ricky, we're just talking about Robinhood. Why does this matter? A lot of Robinhood's demand was coming from crypto. So what do you think, right? If Robinhood rallied with crypto, what do you think is going to happen with Robinhood if then crypto begins to fall? Well, demand begins to fall for crypto, so then demand will begin to fall for Robinhood. It's a domino effect, just like with Coinbase. Coinbase is another very popular crypto trading application that has also been lacking recently because of crypto's performance. It had a really strong rally because of Bitcoin as it brought back demand, but if Bitcoin then begins to crash, then so will these following companies because they follow with the hype of that Bitcoin itself. So I just think it's important to understand the correlation. Do I think that they're one for one, that when Bitcoin drops 1%, these stocks need to drop 1%? Heck no. But it's when you hear these companies talk about their earnings and what areas are making them the most money, you begin to pick up on the specific niches that, a lot of the revenue is coming from. And both of those companies have talked about the revenue that they've made off of this crypto boom in 2023 to 2024. So I'm just reminding you of that. All right. What do I think about Apple or Tesla? I think Apple's a solid company. I have nothing bad things to say about them. The company that I want to talk about is Tesla. So I'm glad that you brought it up. I'm going to do one more stock after this. So if you want me to break down your top stock, share it in that live chat. What do you think I'm going to say about Tesla? So for my long-term portfolio, I had Tesla as a stock that I was invested in. I've reduced more than 50% of my long-term position. And the reason why is, and it's not just me, you will see that it, and again, I could have sold completely early. I didn't sell all of it, but I sold most of it. And the reason why is it's too overbought within a short period of time. Anytime, and again, it's just based off of my risk tolerance. You guys might just have a little bit more risk tolerance than me. But do you know the percent that Tesla has gone up within the past 2 weeks? Nearly 50%. It has seen nearly a 50% increase in just the past 2 to 3 trading weeks. Everything that it was down in 2024, it's recovered in just 2 to 3 weeks. And I know this about Tesla stock just because I've seen it for a very long period of time. Tesla does amazing when it really begins to rally. When it really gets going, it almost feels unstoppable. It almost feels like a pump and dump, right? But when it begins to sell off, there's like almost no hope for it. Just as quick as it went up, it quickly corrects itself. And if you look at the day chart, if you look at how volatile it is, Tesla is not a stock that is like low risk in the grand scheme of things. You could see the rallies, you could see the dips, you could see the rallies, you could see the dips, you could see the rallies, you could see the dips. Apple stock doesn't trade like this. Right? Google stock doesn't trade like this. Every stock has pullbacks and rallies, but they're not always to this degree and this consistent. The rallies, the sell-offs, the rallies, the sell-offs, the rallies, the sell-offs, the sell-offs, the rallies, right? And it's important to be aware of this because, someone that might be very conservative, but very traditional with a traditional background and very low risk tolerance, they might never want to experience or trade something like Tesla. And that's not wrong of them. It's just they understand themselves enough, right? So I think it's just important for you to be aware of the characteristic of whatever stock it is that you're invested in or that you're choosing to trade. Because there's so many different stocks out there. Some that are more conservative and consistent and some that are more risky and volatile. And I think it's very safe to say that Tesla is one of those more volatile ones. Supposedly they have this event that's going to be happening in August. That's their robo-taxi event. Elon has expressed a lot of hype behind this event. I think it's August 8th that it's going to happen. I don't know on the official date or time, but that's where a lot of this demand and this hype is coming from. So I really hope that Elon ends up fulfilling his part of that hype. But Elon has in the past before set very high expectations and follows through with very low results. So just for my sake and based off of my risk tolerance, I decided to take profit here. I am looking to short it, but I will only short it as a swing trade once I get confirmation that it begins to sell off, right? So I'm excited to follow up with it. And I want to remind you, I could be completely wrong. This thing could continue to rally. But there's a handful of people that have began to lock in profits on NVIDIA. One of them, and just making you aware, is Nancy Pelosi. And if you think that she's one of the greatest traders of all time, it was in one of her most recent SEC filings that she shared that she sold partial positions of her Tesla position as it's become extremely overbought. And also, for those that are unaware, we send a Nancy Pelosi trade tracker email every single Monday at 1 p.m. Eastern time. So I call it the, I had an acronym for it, but I don't even know if I want to say it in this live stream. But it's not just about Nancy Pelosi. It's any politician and any politician's trades that they've taken in the past 7 days. So it's absolutely free to subscribe. It's the first link in the description down below. And we just call it the trade tracker. You can call it the Nancy Pelosi trade tracker, whatever it is that you want. You enter your email, you subscribe, and you'll receive an email from us that's free every single Monday at 1 p.m. So you guys can feel free to check that out, especially if you're trying to get tomorrow's email by 1 p.m. Pacific Standard Time. So wait, so me actually selling Tesla ain't that bad. I don't want to say that it's not bad, right? For all those that are maybe a little bit newer to my channel, you guys will see that I never tell our traders where to buy or where to sell. I truly do believe that everyone has different risk tolerance. Everyone sees value in different ways. And just because I'm choosing to be a little bit more on the safer side and lock in profits, I never want to hold that expectation to you, right? Because you might want to be a little bit riskier. This thing could go up to $300 because of all the hype that it's experiencing, right? $300 isn't out of the question. It's already gained 50%. What's another 25, 30, right? But I like to explain to you my why. And that's my biggest thing. During my live trading sessions with the LPP team, it's not that I'm right 100% of the time. I make mistakes all the time. But I explain my thought process behind the trades. So at least if I do make a mistake, I can share my why behind it. And remember, our job is not to be perfect, as we will never be perfect, but our job is only to take advantage of opportunities that we see value in. And if we end up taking a loss, then at least it's a loss that was calculated and that made sense, rather than a loss that was not planned or calculated by any means. And it's a tough pill to swallow. So let's go ahead and it's going to $300 easy short term. All right, Ben, we'll just have to follow up. Wish you nothing but the best. Let's go ahead and just do one more stock, and then we'll call it a live stream. This thing definitely went longer than my 10-minute expectation. My breakdowns are, I guess, a little bit longer. I ramble a little bit too much. This is Yap University. Here we go. PLTR. Let's see if this is a good one. There's a handful of you guys asking about that. So PLTR. Okay. Palantir. Palantir is Peter Thiel's technology company, right? Nice. So really nice recovery. Wow, beautiful. This thing was struggling for some time. From lows of $6 almost, it's coming back to retest previous highs. That's my only question that then I would ask you. I don't know if I like reminding our beginner traders to always look at larger time frames because, different time frames give you different perspectives. On the 1 hour, the stock looks very bullish, or maybe the 1 hour, the 1 hour looks very bullish. It looks unstoppable. Why wouldn't I want to buy it, right? It's been going up. Why wouldn't I want to buy it here? But then when I look at the week chart, I then can see, oh, wow, we're coming up on a resistance that we had back in 2021. And this is really close to its previous all-time highs, right? So maybe I want to be a little careful buying at these overbought levels of $30 just in case it does begin to sell off. But again, this is where it goes beyond technicals. What about the fundamentals of this company can send this thing further than what it was? And not just send it further than $30 per share, but hold it there. Because that's the big thing. Anything can pump, but does it have the fundamentals to support that price value? And that's my encouragement for you, where dedicate some time to be aware of not just on the technical side, but especially if you're trying to go in for a swing trade or a longer term trade, to be aware of those of what can get it further than its previous valuation in the past before. Because I could see why you're paying attention to it. It does look very attractive, especially on this 1 hour time frame, on the shorter time frames. But just as quick as it goes up, it also does have a history of aggressively selling off. And I don't just always ever want to talk about all of the hype and all of the good and never take into consideration any of the bad. I like making our traders aware of both the good and also making them aware of the bad. Because then at that point, it's if all you were looking for was, a yes man to tell you, yes, just continue to buy, or yes, encourage you to continue to take trades with no expectation or tolerance for risk, then it's going to be a big letdown, right? Especially in this market, and especially as we are at all-time highs for overall markets. So I appreciate your guys' time. And again, I do want to remind you, you guys can subscribe to our free newsletter for Nancy Pelosi and any other politicians who take any trades. We send an email once a week, every Monday. So feel free to check that out. And that's the first link in the description down below. For those that want to watch me trade live as soon as tomorrow, that's the second link in the description down below. It's our LPP team. And again, it's a one-time payment, lifetime access, and you'll be able to get to watch me trade live every single day, Monday through Friday. And the last thing is we do have a handful of sales going on Shop Tech Buds. So when it comes down to our wall art, our mouse pads, our t-shirts, anything it is that you want, most likely it's going to be on for sale, and especially our Nancy Pelosi Trader of the Year tee. You guys can feel free to check it out. It's all available at shoptechbuds.com or the fourth link in the description down below. I appreciate your time. Hope that earned your thumbs up. And like always, let's make sure that we